Over the last few trading days, we've seen volatility in global share markets increase substantially. Now, this is normal, and this time it was Trump like it was at the start of April. Obviously, it's going to be any sort of shenanigans that happen around the world that upset investors. But there's a few things that we need to understand about volatility. One is, what is the cause of volatility? It's the ability to trade in and out on a daily basis with a click of our mouse, a tap on our phone. We can be buying and selling the world's biggest and best businesses on a daily basis. Now, for long-term investors, this shouldn't be a big issue, but what happens when it comes to volatility? People get scared, then they sell out. So you need to understand that volatility, when you're investing as a long-term investor, not a trader, that you can buy in, and then you need to put up with the ebbs and flows of markets in the very short term. The long term will be dictated by the fundamentals of the business, things getting better over a long period of time. So volatility is normal, it needs to be expected. You need to learn about investor psychology and how people behave at the best of times and also the worst of times. So these are really important things, and I think that whilst it's fantastic to understand the balance sheet, the profit and loss, the sector that these businesses work in, because we're investing into liquid markets which are volatile in the short term, you need to understand investor psychology nearly above all other things. You can invest into ETFs that can give you access to some of the best businesses in the world, some of the best markets in the world, but you need to know how to behave when markets are going up, and you need to know definitely how to behave when markets correct and crash. What most people do, not all, is they panic and sell and try to protect the money they've got left. And I know you're all thinking, yes, we know the theory, Rob, sell high, buy low, but how you feel at the time is completely different. And this is the bit that everyone needs to get their head around. Please remember, this is general advice and my opinion only of my nearly 3 decades of investing into the share markets as a professional investor and financial advisor. Investor psychology is key. Do your reading. Thanks for listening. Cheers.